All right, I think I can welcome everyone to today's webinar. So welcome to today's webinar with ForwardKeys and with our partners from Transparent Intelligence. Today we'll be examining the travel and holiday rental outlook. And so please warmly welcome the CEO, Pierre Becquerel, and Juan Gomez, our very own talent from ForwardKeys, to the stage. Juan will begin the presentation today with the elements regarding flight data, and then our partner Pierre will look at the holiday rental scenario and share insights and data from that perspective. I'm here to facilitate the Q&A session, which we'll have at the very end, but please don't hold your questions to the very end. If you have questions, feel free to drop them into the questions box or the chat box that you can see on the screen, and we'll try to answer them as much as we can in today's session. And if we run out of time, we will send you our answers via emails, just as we will send you also the final presentation. Well, thank you for attending today, and I hope you find this very informative. And over to my colleague, Juan.
Thank you, Adriana. Hi, and thank you again for joining us in today's webinar with Pierre from Transparent Intelligence. I'm Juan, as Adriana was saying, insights expert at ForwardKeys. And to kick off this event, I will start with the current global travel situation. Today, we'll talk about the key trends that shaped the industry in 2020 and how these will continue impacting travel in 2021. In my brief presentation, I would like to put the focus on how reactivation did not always meet expectations, how the desire to travel still exists despite all odds, how strategic destinations have managed to mitigate losses caused by the coronavirus crisis, and how travel restrictions and flight corridors have been key and will continue to shape travel this year. Yes, there is a lot to share with you today, so make yourself comfortable. But before I start, I'd like to share just a few words about ForwardKeys, in case you're new to us. We're a B2B travel analytics company specializing in air travel data. The core of our business is helping customers understand travel, demand, and trends in real time to seize new market shares, new business opportunities. We regularly publish fresh insights and analysis on our website and via our social media channels. So follow us on LinkedIn or sign up to our newsletter to always be one step ahead of the curve. At ForwardKeys, we offer a variety of data sets, such as air bookings being made and tickets issued, or seat capacity for historical reference and forecasts. If you want to learn more, visit our website or send us an email after the webinar. Now, back at what the data has to say for the beginning of 2021. Since January, all global regions have continued experiencing declines in international arrivals, in the range of the -80% year-on-year, with Asia and Europe with the largest year-on-year declines. Comparing the performance of the first 2 months of the year with that of December 2020, we sadly cannot see any global region improving. With the pandemic only starting to slow down in the last few days and not in all countries, and with the new strains of COVID menacing the de-escalation process, the situation keeps on deteriorating. This is most evident with the Americas, which had been the top performing region until now. The destination is rapidly declining, with total international arrivals worsening by 12.8 percentage points. Let's now look at 2020 and see what we can learn from the most difficult year for our industry. I would like to start by looking at the evolution of international air seat capacity in Europe, with 2019 seats in the lighter line and 2020 volume of seats represented by the area. You can see from this chart, the peak during Christmas was far from the reactivation of international travel to Europe seen over the summer, which peaked at about 41% of previous year volumes during July. During the much-awaited Christmas period, air capacity only reached about 25–30% of 2019 volumes and was mainly driven by regional traffic. With the pandemic striking hard again, air capacity has now dropped to about 20% of early 2020 volumes and keeps on decreasing. This demonstrates that reactivations did not always meet expectations, and that with rapidly evolving situation, businesses and tourism professionals should bear in mind that volatility is here to stay. I would like to continue by examining the top 5 most resilient cities in Europe during the last quarter of 2020. As you can see in the map, not all is lost. All cities were in Southern Europe, revealing the important role the leisure segment still has, as well as its resilience. Heraklion in Crete, Greece, came first, only 32% behind last year's volumes. It was followed by 2 destinations in Portugal, Faro and Madeira. Other island destinations, such as Catania in Italy, experienced a relatively strong performance considering the situation on the rest of the continent. Looking at the end of the summer 2020 and the beginning of the autumn, let's now focus on the warm shores of the Mayan Ribera in Mexico and the stunning Baja California. While European destinations started reopening to other European visitors during the Northern Hemisphere summer season, US travelers had little choice to travel, with only a few destinations such as Mexico or the Dominican Republic, just to name a few, remaining consistently open for them. Mexico is one of the best regional examples in the Americas to illustrate the importance of staying open for business. Key tourist hotspots such as Cancun, Los Cabos, and Puerto Vallarta capitalized on the interest of US travelers. Cancun and Los Cabos even experienced year-on-year growth for the USA visits since August. This is quite an achievement given the status of travel worldwide. However, as more destinations across Latin America and the Caribbean reopened in early autumn, Mexico is starting losing its competitive advantage on the US market. While tickets for future travel to Mexico accounted for as much as 54% of all tickets issued in July for future travel to Latin America and the Caribbean from the USA, this figure decreased to 38% in November. This proves how competitive the landscape has become and how short-lived windows of opportunity can be. Businesses and destinations need to be prepared to make rapid and strategic moves to make the most of them while they last. The US and the Mexican key tourist hotspots that we just talked about were not standalone examples. Arrivals from Israel into the Seychelles registered significant growth at the end of last year, after Israel was declared a green country. This meant Israeli nationals were allowed into the islands without the need to quarantine. Since the announcement was made at the beginning of November, tickets from Israel to Seychelles have registered an impressive 3-digit growth, significantly surpassing 2019 levels. And despite Israel not being traditionally one of the key markets for the Seychelles, the country became a key market for the island nation in the last quarter of the year. Israel then closed its skies in January to prevent the entry of virus mutations, to ensure a quick process with the own vaccination campaign, which is one of the fastest in the world, as you know. Seychelles is currently welcoming worldwide vaccinating visitors and plans to reopen to all visitors in mid-March, when it is expected that most of the population will be vaccinated. It is clear then that another learning from 2020 is the need of widening the scope for potential new source markets. What was your key source market previously, prior to the crisis, might not be relevant anymore. So we recommend to keep your eyes open to new opportunities, and that is why the data is here to help you. Travel restrictions and flight corridors have shaped and will continue shaping the landscape for the foreseeable. Travel corridors have been a good example of reciprocal travel partnerships. Russian arrivals into the Maldives is also a good example to finish this overview on 2020 and move into 2021. The Maldives has grown to be one of the most popular destinations for Russian travelers at the start of 2021. The Russian government announced its decision to allow flights to the Maldives on 3rd of September. Russia has consistently ranked in the top 10 countries which accounted for the highest number of tourist arrivals into the Pacific destination. As per bookings issued by 20th of January for travel up to April this year, tickets to the Maldives are advancing fastest, ahead by 44% compared to 2020 levels, whereas tickets for total international travel from Russia are still 87% below the previous year. Let's now look at 2021 and see what it has in store for us. Domestic markets were key during 2020, and we expect this trend to continue in 2021. Domestic tourism will remain in the driving seat and be of utmost importance for many destinations. Domestic travelers are something to keep an eye on. Looking at the outlook for domestic markets across the globe and examining issued tickets as of 19th of February, bookings in Russia's domestic market for the next 3 months are the most advanced among the top 10 domestic markets worldwide, as you can see in the table. Issued tickets have already reached 74% of 2019 levels for travel until April. Next comes Brazil, where domestic flight tickets issued have reached 54% of 2019 volumes. As for China and the US, their domestic markets are currently tracking behind with figures that represent only about half of 2019 volumes, 48 and 43% respectively. What the resilience of domestic travel shows is that many people are still ready to fly, and this is a good piece of news considering the current context. We expect, once more, that regional travel will follow on domestic reactivation. Regional travel was reactivated in the Americas in 2020, as we've seen with the example of travel to Mexico. Looking at the outlook for international travel to from the US up to April, 3 Mexican cities continue standing amongst the top 10 most popular destinations. Tickets to Cancun represent 17.4% of all tickets to international destinations over the next 4 months, a significant increase compared to its 2019 levels of just about 5.4%. Also, when compared to 2019 ticket volume, bookings to St. Thomas in the US Virgin Islands are ahead by 25.5%. Despite the lower volumes, this is significant considering that tickets for international travel from the US in overall are down by 70% in comparison to 2019 levels. Another interesting trend I'd like to highlight is the last-minute bookings, the fact that last-minute bookings have become the new norm. In this graph, we can see the ticketing pace for summer travel outside of the UK in 2020. That's the line in the chart, and 2021 represented by the area. Traditionally, summer holidays are planned ahead, with most bookings happening from January to March, April. Last year, as you can see in the graph, bookings virtually stopped between the end of February and May due to the first wave of coronavirus cases in Europe. What is striking is that they grew again sharply once destinations, particularly in Southern Europe, like Spain, Italy, or Greece, announced reopening plans in mid-May. In other words, bookings were delayed until the last minute, and it is not unreasonable to think that something similar will take place this year. But this will partly depend on the speed at which the vaccination takes place and the evolution of the pandemic. In any case, this extremely reactive behavior from travelers means that travel professionals will need to adapt to shorter lead times in an ever-changing travel ecosystem. With recent announcements in the UK about their de-escalation plans, this key outbound market is one to keep an eye on, and we look forward to sharing our freshest insights on it soon. For now, the outlook for some key global tourist destinations is quite bleak, as expected. San Jose de los Cabos or Cancun are only around 30% behind for arrivals between June and August 2021, as we were commenting, but other key European and Northern American destinations remain in the range of -70 to -80. Hopefully, these last-minute bookings that we were talking about will improve the outlook once conditions improve and restrictions are lifted. Let me now close the presentation with 3 takeaways from the first one. That is, all is not lost. We are at a low point, but we have seen that destinations have the resilience to overcome obstacles once travel restrictions are eased and flights available. Second, the desire to travel still exists. Time after time, we can see signs of pent-up demand, as we saw with the example of Israel. Despite the pandemic, people are still keen to travel. And even if it's not intercontinental for the moment, they are looking at regional or domestic alternatives, and hospitality and accommodation businesses should be ready to seize these opportunities. Finally, volatility is here to stay, is the new norm. So businesses that work in a fluid and agile manner will succeed the most. Of course, data should be there to guide you along the way. Thank you for your time. Please stay up to date by following us on LinkedIn or email webinar@forwardkeys.com to get this presentation and learn more about our suite of data products, especially designed for travel and tourism sector. Over to Pierre now.
Thanks, Juan. All right, thanks Juan and Adriana, and hi everybody. Thanks for joining today. I'm gonna go move ahead my slides. All right, so just like Juan did, I'm gonna share a few words about our company, Transparent. We're a data intelligence company focused on rentals and short-term rentals. Basically, we track everything that travelers can book from 1 to 360 days that are not hotels. And we like to say that if it has a kitchen, we have it in the database, all right? And among other products, we have a product destined to DMOs and tourism organization that helps understand supply, rates, and origin of travelers, all right? So some of the insights that I'm going to share with you today are actually extracted from our tools. And I'm probably going to echo a lot of what Juan said, because what we've seen into rentals and short-term rentals is very, very in line with what the airline industry has seen as well. So we'll see that in a minute, but before, because I'm not sure if everybody in the audience is very familiar with what we consider short-term rental, I decided to put a few slides here to clarify a bit about the definitions, right? So what we consider short-term rental is basically any house, apartment, villa, or other type like B&Bs, RVs, castles, etc., that you can book from 1 to 360 days. If you look into the global supply that we track at Transparent, we've got around 7.2 million properties currently live and being advertised as short-term rental globally. And that would be only entire home. We're not speaking about shared room here. We're only looking at entire home. And as you can see, more than half is actually apartment, and then the rest is traditional villa and houses. All right, just to give some context. An interesting question as well is that where is this inventory book? I know a lot of time we sort of confuse this industry with Airbnb. Well, I'd say it goes beyond Airbnb. Obviously, Airbnb is one of the leaders. It represented this is back from 2019, 2020, around 30% of the reservation just here in Europe. Over the US, it's slightly lower, but basically it gives you an idea that there are more channels, and there are also players that receive direct reservations directly. So professional managers that operate these vacation rentals and receive the reservation either by phone, on their website, by email, etc. Right? Just to show that this industry goes beyond only one player, it's actually a little bit more complicated than that. Then I wanted to show also how big this industry really was, right? So let me go back here. In this chart, what we did is plotted the number of hotel rooms by country compared to the number of vacation rental rooms. I love this chart. I use it quite often, and we just recently refreshed it. So what you can see in the x-axis is the number of hotel rooms, and the y-axis basically how many vacation rentals. So anything above or in the red area are actually, every dot there are actually countries that have more rentals than hotel rooms. So for instance, in France, 67% of all rooms are actually rentals. You can see Italy is almost à la par, and then in the USA, 1 of every 3 rooms is actually in a rental. So it puts things in perspective, right? I mean, a lot of times we think this is a new and up-and-coming industry, but it's actually very large. It's been large for a long time, and it's just very fragmented, which makes it less speakable, but it's basically, or maybe less noisy, but it's actually very, very large industry, especially when you compare to hotels. All right. So now, how did we get there, right? How did the supply grow to where it is today? Well, I wanted to show you how it grew since January 2018. This is the global, global room capacity, where we are today at 14 million rooms. And if you take into account the fact that a lot of rentals actually also have a sofa bed or some extra space, it actually can fit much more people than that, right? Close to 30 million. And what I think really interesting is that over the last 3 years, this industry has actually added 3.4 million rooms, which is literally the same size of the hotel industry in Italy, Germany, France, and Spain combined. So it's super impressive. It's like, all of these hotels were created over the last 3 years, or at least equivalent in terms of capacity at a global scale. So, very large inventory that is still growing pretty fast. And if you see, the last year was actually, not a decline, it was actually getting steady, but we didn't see that much inventory disappear. Maybe I'll get back to it in a minute. All right, so now, just like Juan, I wanted to also show you how this industry has, reacted to the coronavirus and the vacation rental industry, short-term rental industry. And you can see that, the recovery has been somehow spectacular. And the actual occupancy after lockdowns actually managed to go back to interesting levels. So obviously not the same level as pre-pandemic, but we can see that the recovery was actually quite important. So obviously these are averages and they don't really represent, disparity in markets. Obviously urban markets are much more affected than leisure markets, but it gives an idea of how flexible this industry is and how much demand there are as soon as people can actually go back and travel. What you see in the blue dotted line here is actually the occupancy that is on the books for the rest of the year, right? The reservation that are made, right? Now, I'll come back to that as well at the end of the presentation. All right. I wanted also to show you how there are differences among continents. And you can see that one of the markets that resisted the best or recovered the best is actually the US and North America. In here, what we're showing is number of reservations by date of booking. So these are not actually number of nights, these are number of reservations, right? And what I think is interesting is you could see as soon as the market started to reopen, you could see reservation come up and a lot of volatility, basically driven by all the restrictions happening around the world. But what we can see is that as soon as the restrictions are lighter, basically the demand picks up again and new reservations keep coming. And we've seen that a lot, when there are opening in France or anywhere else in Europe, you can actually see how reservation picks up again. So this will to travel is there. It's just being blocked by the restrictions and the sanitary urgency. Right. So now I wanted to share some good news for our industry, for the short-term rental industry, which is that average daily rates have resisted extremely well. Right. You can see here the evolution of the average daily rate. So the x-axis again here is a full year. And you can see the evolution since 2018. So you see that actually 2020 was not too bad. Even over the summer, we actually had a surge in pricing. This, obviously could be meaning that properties booked are actually slightly bigger. That basically they are in areas where prices are slightly higher, like villas or houses and leisure markets. What I think is interesting overall is that ADRs have been able to maintain. And if you compare that to the hotel industry, which has actually seen a huge decrease in ADR, I think this is a positive news and silver lining for vacation rentals. All right. And another point that I quickly mentioned earlier is that urban were much more affected than vacation and leisure markets. So urban would be Madrid, London, and similar cities. And basically, what you can see is that the share of all reservation belonging to urban has dropped drastically from a year to another. Even though at the end of the year we see a surge, it's mostly related to the fact that trips made over December and especially for New Year's Eve and Christmas tend to be as well urban. So which says basically that demand is not too far, but restrictions are here and mostly blocking demand for the urban markets. All right, and obviously this shift has also been seen in domestic versus international. I know Juan mentioned that demand for domestic was more important, and we see the same thing in rentals. So you see most countries used to have much lower share of domestic demand. So Spain, for instance, was around 25%, and ended of the year around 68% of domestic demand overall. You can see pretty much all the geographies have had a shift, and except a few ones that were already extremely domestic that had less room to grow. But overall, this has affected every destination. And similarly to what Juan saw, with the flight and show with the flight data going out to Cancun and other Mexican destinations, we wanted to show here how we also saw an increase in arrival from the US to Mexico. And this is simply to echo that obviously implications on the airline market will have implications on the rental market, and you can see that the recovery has happened. We don't have the same number of reservations as last year, but reservations have actually higher lengths of stay, which is something we'll see now, which means that at the end of the day, we actually have more night books overall, and I think that's very interesting to see that locally it happened. And similarly here, I wanted to show you how the dynamics work in a country like Portugal, when right at the start of summer, when people could travel again internationally, the share of international demand started to get back to normal, and with an evolution related to the situation and the sanitary situation, and the limitation to travel internationally, right? So you could see that this is affecting, and basically there's a lot of volatility in what we see in every market. All right. Another thing that we also see in rentals is that lead time are actually also much shorter. So you see, we ended up last year with a lead time of 5 days, which is extremely short. We used to be around 30 days. So what that means is that it's much harder to prepare. So whether you're a destination marketing organization or you're a hospitality company, you have to adapt your operations and your marketing for much shorter booking window, which is a trend that we've seen basically globally, right? And in parallel with shorter reservation, we've also seen actually longer lengths of stay. So travelers have much more restrictions. It's much harder to move, but when you do, you actually stay much longer, and that's something very interesting. And this is again an average, and it hides the fact that there are also a lot of very long reservation, what we call mid-term rental, which is beyond 30 days, which is also a trend that is happening and that drive this average up, right? And we started the year just like we ended, with lengths of stay around 6 days globally. All right. So this is good news, because at the end of the day, we've got ADRs that have maintained pretty well and lengths of stay that are longer. So overall, the volume of business, managed to maintain, even though it's sort of a one-leg business, because we can't count on the international part of the demand. But the industry has been pretty solid with what's left of the domestic demand and this increased length of stay. So here, this is just some example of markets, and maybe we can share the slides, and if you want to get in touch, we can also look at a destination that you might be in. I basically wanted to show some urban markets. So the dotted ones are urban markets, and the other lines are more leisure markets. And what we did here is to show you what's on the book today for the rest of the year until summer, and compared to what was on the books a couple of years ago. What you can see is that a lot of the markets are way below, but there are some silver linings. There's some markets that are actually behaving better than they used to, and that could be done by a mix of mid-term rental and other and higher lengths of stays. This is similar in Europe, just to say that even though overall it looks pretty gloomy, especially in urban markets and with all the restrictions, but there are still demand, and there are something on the books for the summer, and actually interesting to see that there are reservations here already for the summer. And finally, we wanted to show you this global view of the occupancy on the books compared to what it was a couple of years ago, right? So what you see is that obviously 2020 was really looking really bad, and that was mostly due to a wave of cancellations that wiped out the calendars right when the pandemic started, when 2019 could be considered like a normal year. And you see 2021 is actually interesting, and it's mostly driven by the fact that a lot of people doing rentals have shifted to doing mid and long-term rental to occupy the properties by other means, and sort of maintain the inventory alive by doing alternative type of rentals. And the fact also that cancellation policies are much more flexible than they used to be, and lengths of stay are also higher. So overall, the rental has resisted and is resisting pretty well amidst the entire travel industry. I would say that rentals and short-term rental are probably the best and the strongest industry within travel. So just here, same thing, wanted to leave you with key takeaways. Vacation and short-term rentals are very strong supply and compete in size and volume with hotels. that the momentum for short-term rental is quite high, as you can see with the huge recovery we had after the lockdown. Obviously, the demand is dominated by domestic. Demand is heavily dominated by domestic and leisure markets, with seasonality. As soon as the restrictions changes, and overall, just like in the flight industry, I think the environment is extremely volatile with punctual local recoveries, becoming the norm and affecting every market. And that's it for me. So we've got a bunch of resources for the attendees. We've got a lot on our website at ctransparent.com, but we also have 2 online courses for anybody who might be interested, especially one dedicated to how to build your own visualization tool and your own dashboards dedicated really to tourism and travel organizations. So if you're interested, you can reach out to us via the website, or don't hesitate. You can also ping me on LinkedIn. Just feel free to reach out. We'll be happy to share that with you. And I'm sure also check out our blogs, because we do publish quite a lot on a weekly basis. And that's it for me, guys. So I guess maybe we can take a few questions if we have time, right?
Sure, let's do our questions at the moment. We've been given a few questions already in the question box. Please don't be shy and drop yours in there if you have any. Juan, would you like to come back on?
Yeah. I'll switch the camera in a sec.
Okay, so the first question is from Karen Kipusko, and her question is, how will the vaccine passport impact the flow of travellers within Europe? Pierre, would you like to take that first?
It's a good question. I haven't seen actually a huge norm around vaccine passport, and I'm guessing, Juan, you might be better suited to answer that, because I guess it affects more airlines than rentals. I'd actually love to hear your take on that.
I think it's still early days to to talk about the impact that these initiatives could have. Of course, every initiative will have an impact, and hopefully, let's hope for a positive one. I mean, we've seen the releases of pent-up demand that happen every time that a politician gets out and declares a plan to reopen borders or to restart restart tourism again. We see that people, as we were looking in both my presentation and your presentation, are still very keen to travel, and the minute they have some certainty that they will be able to travel, they start booking their rentals or booking their flights, right? So obviously, vaccination, if the pace speeds up a little bit, that will definitely have a positive impact in the summer season. And anticipation is key here. So the more certainty travelers have, the better will be for businesses, so they can plan ahead.
Okay, great. We have another question that just came in. This is great. No one's shy here. From Anthony Lasandra. He says, as hotels maybe have more tariffs and aggressive to recover their minimum occupancy, do you expect any reduction of overall supply in the midterm for short rental? Some of them perhaps going out of market. What do you think?
Yeah, I mean, it's an interesting point, because the hotel supplies actually decreased a lot. The number of hotels is the same, but a lot of them are still closed, right? So effectively, the hotel occupancy, if you look in terms of the total supply, is actually even lower than the one of the open hotels, right? So what we've seen on the short-term rental side is that the supply is mostly still there, still listed on the main travel agencies and travel platforms. What happens is that a lot of these have been put on hold until more sunny days. So a lot of this inventory now is being used to do midterm or even long term. And in the meantime, their accounts for the short term is still live, because people didn't want to lose all their reviews in case they want to go back to doing short-term rentals in a year time. So overall, the supply of what's really active now, it's slightly lower than what used to be, but it's also been compensated by the fact that new people have been trying to look for this extra income and also renting their property. So overall, it's been actually pretty steady.
Okay, thanks for that, Pierre. We have another question here from Michael Heisman, and his question is to do with, do you see things trending towards larger outdoor less exposed destinations, beaches, compared to tourism picking up to large, more crowded cities and places like London and Paris?
And in our side, we definitely do. Like we saw it last summer, like urban markets were hurt really, really bad. I think that the silver lining as well is that, in some cases they do recover pretty well. And I think, travelers are getting used to the restriction and wearing masks and, having limitation on restaurants. And what you could see that there are actually some urban travel starting again. But definitely, the inventory that people look for is, bigger properties and that's what's being looked for at scale. So, houses, villas, property with their own amenities, and that's definitely one of the advantages that short-term rentals have to offer. And this is what we saw last summer, and we definitely expect to see the same thing. A boom of demand for this kind of supply in all of the leisure markets.
Mm-hmm. And this one is for Juan from Lorna Holland. She's asked, the UK just released their project timeline working towards domestic travel by April and considering May for an international travel by June. What other countries have you heard have similar timelines? This is a big question. Everyone is looking towards summer and that's the market time, right? So what other destinations have you heard, or have you even heard, Pierre, any news about markets opening up for summer and making actions such as what our friend Boris has done in the UK?
I think most countries are being quite cautious about releasing dates and being making specific plans about the reopening of tourism. For example, here in Spain, we had the government a few days ago announcing that they will be celebrating the World Travel Market here in Madrid, Fitur, as probably you all know, in May. It's usually something that happens around January each year, and obviously this year was cancelled. And that sort of like brings some certainty about of course, governments moving forward and trying to reignite tourism. We've seen things, for example, in other countries, in other latitudes, for example, Thailand, making big steps or announcing big steps towards welcoming passengers with that have been vaccinated. And I think all these, as I say, all these announcements should definitely push demand. We saw it last year. We were commenting earlier on during the presentation, that release of pent-up demand that happened just days, if not hours, after some of these countries in southern Mediterranean countries announced in mid-May that they will be welcoming again international tourists by June, July, and we expect to see the same. We're yet to see what was the result of the latest announcements in the UK, but we're looking forward to share that with you.
Yeah, well, I think we should comment here on a hot topic, which is the whole move for remote working and the introduction of digital nomad programs across various destinations. Have either of you noticed any trends in longer stays or more solo travelers traveling to certain destinations? And if so, which destinations have you seen this taking place in?
I don't know, Pierre, if you want to start. I forgot a couple of comments.
Yeah, sure. I mean, for me, the whole digital nomad, sort of trend is still very small, so there is definitely demand there, but it's not going to be compensating for, what we've lost. So we do see some trends for mid-term rentals. We do see, demand for destinations like the Canary Island, Madeira, etc. But these are still, let's say, small compared to the sort of more generic travel, right? I think this is it's an interesting niche, but it stays a niche, and it won't make up for everything else that we've lost with the pandemic.
Yeah, we've seen some interesting numbers as well. Although, yeah, as you quite rightly say, I mean, it doesn't account for an important volume, but it's also interesting to see that there is that sort of like initiatives coming from countries opening up to these new types of travelers and seeing how this is reflecting on the figures. There are a few interesting examples. I mean, just to name a few, I could talk about Iceland, Dubai, Dominican Republic, Belize. For all of them, we've seen rates or ticketing for longer stays, solo travelers etc., climbing up quite substantially, and obviously that's definitely linked to those moves from countries that are starting to promote a different type of travelers, or trying to attract this new type of travelers.
Okay, great. We have time for one more question from the audience, so please don't be shy and drop in a question. Meanwhile, I'll provide a question to both of you. So what tactics do you recommend, considering that we're living in such volatile times? What advice do you give out there to people struggling in the travel industry within hospitality and tourism?
Well, if you allow me to go first,
Yeah,
I think, it's something that I hinted, and I think both Pierre and I, as data experts, we will definitely agree on the importance of data, right? Data has sometimes been seen as a not a waste of time, but more as a liability more than as a strength. And I think what is being now made clear with this crisis is the importance of data, and the data can make the difference, can make yourself differentiate from your competitors, right? So I think what the advice I'll give to any business or any destination will be to base their decisions on data, rely on data. There's a lot of data out there, but get the quality data and make informed decisions based on that data. So I think that will be my key advice.
Okay, thanks, Juan. And Pierre, what would you say? Are you going to say the same thing?
I can't say better. Yeah, well, it depends who's on the audience, right? If you're in the hospitality space, it's by now a lot of the measures by all the professionals have been taken, right? Reacting fast was key, and I think a lot of the operators that we've seen in the market have been able to react fast and try to save and gather as much demand as they could from pivoting to midterm or looking for alternative source of demand, right? And on the destination side, I think I'd say the same thing. It's very important to keep an eye on the trends and the outlooks, and not only looking at the past data, but also into what's happening today, every month, because now things are changing so fast that you don't want to miss out on any of these trends. Especially the trends that we showed today. I think it's basically much more volatile as we've ever seen before in travel, right? So important to stay up to date, and I guess now it's easier because there's so much content out there, and I think it's like you said, a matter of finding the right sources and the quality data out there.
I think a key term that also Juan said was the new norm is all about volatility. And Juan, can you demonstrate how volatile the market is, particularly when it comes to lead booking times? I know that we've got a shocking figure for the domestic travel in China. What was it again? Remind me.
Yeah, domestic China has been an interesting one. I mean, the figures that I was presenting earlier show, of course, a more bleak picture, but we've seen during most of 2020 that the domestic numbers in China were quite close to the previous year levels, even in some cases growing year on year. The Mid-Autumn Festival, for example, was a really good example of how strong that market was and how the reactivation did happen for quite a bit. And talking about the lead times, I think is something, the shortening of lead times and how these last minute tickets have become the new norm. I think it's something we've seen everywhere. Of course, people is less willing to book their trips or to plan their trips with longer in advance, because as Pierre was just saying, things are changing really rapidly. So obviously, people would rather not take the risk until there is certainty that they will be able to hop on that plane and go to the beach or to their the desired destination, right? So for the case of China, we saw lead times dropping from maybe 2-3 weeks to as less as 4 days or even less, and that is in itself quite a really big decrease. But then we saw other moves as well. So for example, looking at something closer here and putting our focus again on the UK outbound market, back in October, at the end of October, just a couple of days before the start of their Mid-Autumn I think it's midterm, half-term holidays, school holidays there, which is quite a big holiday period for the UK for schools and families to travel. It was announced the Canary Islands corridor, and with only 2 to 3 days of advance, we saw over 1,000% day-on-day increase in tickets being issued just for people, as I say, booking, hoping directly on a plane and hitting the Canary Islands. So I think those examples are really, are really there to show what we've been discussing, right? That people are booking very last minute whenever they have certainty that they can travel.
Yeah. We just got a question now for Pierre from Anne-Laure Tunka. She said if you could give examples of the countries that have benefited the most in hospitality from digital nomad trends.
It's a good question. So we haven't. I don't have anything on top of my mind on this specific segment because we look overall. So it'd be interesting to look into maybe increase the length of stay and things like that. But I think I mentioned a few interesting examples. I would maybe add Puerto Rico to it, and there's a number of other destinations. But on top of my mind, I wouldn't be able. So I'd love to have that chat maybe offline and see if we can find any evidence of markets winning the digital nomad segment. That'll be interesting.
Okay. And to close up today's webinar, I just would like to ask both of you, what are some trends that are perhaps ones that started last year that you think are here to stay, or things that are just lately popping up on the radar that you think, hey, this will be something interesting to keep an eye on? What would you say?
Who wants to start?
Yeah, yeah, sure. I'll go. I mean, for me, I think what's really interesting is the complete difference between urban and leisure. And for me, what is really interesting is to see how this will balance out in the season until summer, right? And I'm quite positive that the demand is there, and we've seen it. Intra Europe, as soon as something reopened, you can see some travels going on. And now that travelers are sort of used to that situation, my focus will be in looking at the reopening and the urban markets to see if something will happen this year, or if we still have to wait a couple more years before the urban really reopens. So that's where I think it's going to be a big difference. And then the international travel, which I think is much slower to really take place, and there's something, I guess, with thanks to ForwardKeys, I'll be able to monitor carefully, and especially tracking the seat capacity, decrease that you were showing earlier. I think it's much slower to adapt than the hospitality market. So this is for the sort of more longer term. This is the kind of metrics I'll be mostly focused on.
Yes, indeed, they're big. Yeah, sorry, Adriana. Yeah, no, I was just following on what Pierre was saying. I think it's true that putting a plane on the sky is not something that takes one day. There's obviously a lot of things to play around with. So obviously things will be progressive. So my big focus, or I would suggest people to put the focus on domestic, because domestic was huge in 2020, as we were seeing with our data, with transparent data, and I think this year will still be key. So for those for everyone that is listening to us and have accommodation, translate your listings to your local language, because that's gonna be key. And yeah, of course, intra-regional travel in Europe, it will happen as soon as borders are open. But let's put the focus on the domestic travel first, and let's try to make the most of it.
Yeah, good tips, good advice there. And we have no more questions from the audience, so I think it's a wrap. I'd like to thank you both for today's presentation. I think it was very informative, and we discussed some very hot topics. Pierre, thank you so much for your time today and disclosing what's happening in the holiday rental market. I like the fact that we could align the two different data sets showing the relationship between flying and staying in different destinations. So I think it was very useful for many out there. And for those of you who tuned in today, check your inboxes because you'll be getting the presentation sent to you shortly. Thank you all for coming today and stick around for the next webinar. See you.
Thanks, everybody.
Bye.
Ciao, ciao.
Thank you, everyone.
Bye.